talking to a lot of people the last few weeks, there seem to be two major camps in the community. Like one is like Hex is going to the moon, maybe parity, EXPX parity. They want their copies. They got their liquid, they got their stakes, their bags are loaded. And the other camp's like Hex is going to dump. They want to get their dry powder, get ready to pick up. If PulseChain and PulseX, dump after launch, they're going for that angle. That's what I want to explore with you two. Like, what, I guess, could you make a case for both sides? Like, which one do you think is more likely?
I mean, I personally think, there's those two kinds of people. The people who dump their hex to get dry powder for Pulse, I think, are going to buy Pulse, and on Pulse Chain then probably move that into Hex, where they can actually use it and stake and unstake with reasonable gas fees. And I think that's going to be a lot of upwards pressure on Hex on the Pulse Chain. And I think that the people doing that on the Ethereum chain, obviously it's going to push the price down, and Axis knows way more about this stuff than I do, so I may be completely wrong. But I would imagine that a low price on Ethereum is going to attract a lot of buyers. And I think that Hex in both chains has pros and cons. One of the pros of the Ethereum chain being that with the high unstaked gas fees, a lot of the smaller stakers are going to move to Pulse Chain. So there's probably going to be less staking going on there, which means that there's the potential for more daily payout per T-share on Ethereum for those that do have big T-shares on there. And then with Pulse Chain, I think there will probably be a lot more staking due to the gas fees, and that could drive the share rate up. But I'm just guessing. So
Yeah, I think you're right. I think like the frequency of staking is going to be a higher rate on Pulse Chain because it'll be more affordable, but the frequency of staking on Ethereum will be less, but the size of the stakes will be bigger. So it's just a function of size and frequency, right? So both ecosystems are going to have value. For example, if you pull up the screen share here, I can show you what happened, back here. Just a few weeks ago, this was back in February, a whale stepped in at this price, roughly around 5.2 cents, and bought 1,000 ETH worth of Hex off the market and staked it till May 6th, and then bought again at 8.2 cents somewhere in this general region here. But it wasn't. I'm sorry, it was on the come down here, and staked that till May 6th. So the combined stakes he ended was worth $35,000, and he paid a $260 gas fee here yesterday, and it was still in profit, right, in terms of the first purchase, because that was at 5.2. We traded at 6.6 yesterday. So he's up on the first, down on the second. The net is that he made 35,000 in dollars of Hex in yield in 2 months. So there's definitely a market here, even if like Hex stayed flat forever at 5 cents. Like ETH whales can take portions of their thousands or tens of thousands or hundreds of thousands of Ethereum economic energy, put it into Hex, and see a return. So it's a no-brainer that Ethereum is going to get bought up off the lows. And the reason why I can support that is by when you look at this chart, you see it's in a clear uptrend. I have this channel like basically going through here. This is like the general fair value channel that I see on Hex. And then also for you, I have the yellow 200-day moving average. And the last time we really played with the 200-day from the top side coming down into it was back here around Big Payday, where before Big Payday, we came down into it, traded 2 weeks below it, popped up above, sideways, held it as support, broke off going into Big Payday. And then after the inflation increased by 30%, per stake or whatever, the total network basically grew 30% more. I think it was like 200-ish billion Hex came into creation at that day. All of that extra inflation was then dumped off, and then the price went below the 200-day moving average and traded below for about 3 weeks. Before rising back above and then going up to eclipse the all-time high within 4 weeks after that, right? So what this did was it was a drop in price. It was about a 60% drop to test the bottom of this parallel channel. And I'm looking for the same thing here, is where, you're going to get a certain class of people that can't afford Ethereum gas fees, and they're going to make an exodus off of the Ethereum chain. And so, what that looks like is a test of the 200-day again. And if they're successful, the price can drop, upwards of 60% to test these lows. But however, because there's not that much liquidity sitting below 3.2 cents, that's going to be short-lived and then should be bought back up quite rapidly back into the anchor position between 3.2 and 5.4 cents, and I can show you that now on the thanks to a tool made by this guy named EmiBop. He built us like a live liquidity viewer inside of the chart itself. So like if you go to Trading View and you look up the HEX USDC chart, I like to use the daily, and I'll pull up the LP bands. It looks like the LP bands have changed. Let me see if I can get the most recent loaded in data here. Indicators. 1 second. Freezing. All right. So the way I like to look at this is like basically you have this anchor position of liquidity sitting here between 3.2 cents and 5.4 cents. And that's been in there for almost 700 days. Let me brighten it up a little bit so you can really see what I'm seeing. And that's significant because no matter what happens in terms of after the fork, that liquidity will likely not move. And so I'm calling it the anchor LP because it's really where the market can count on there being liquidity. And so, you know, the market's basically valuing somewhere between 7.5 and 5.9-ish cents in this general region. This is like where the market is setting liquidity and taking risk to give a trading range for the price. And this is the base liquidity that's been set by one of the system's biggest players, potentially the OA, and that has not moved in 700 days. So if there is an exodus off, it's going to take like $3 to $5 million of pressure to push the price down to here. And then anyone that gets stuck down here at 3.2 cents will capitulate, and this thing can wick low. But because there's nothing out here to buy or sell, someone will buy, like, you know, get a sweet deal at 2 cents, and they'll push the price right back up into this range and make it resume. So it's more of in favor of those that want, the whales that want to accumulate this range and just absorb millions of dollars of a HEX inside of this range of 3 to 5 cents in the event that it does get sold off, right? And then likely you'll see people exit their LP positions here leading into the fork because they might want to keep their coin. A lot of this has already disappeared because mainnet might be coming.
Right. Are there signs of people, you know, accumulate, or, you know, I think at least a month ago, the popular thing was accumulating HEX, EHEX to get your HEX, you know, 12 cents. Everyone got excited. You mentioned about that with V3 and stuff too. Are people betting on HEX not dumping and PX being valuable at the ratio trading period? Or are they betting on, hey, I think HEX is going to go down. I want the dry powder to pick up the PLS and PLSX dump. Do you see anything?
All the above. All the above, man. We can't know what happens on the other side of the fork other than everything's supposed to start at zero, right? In terms of dollar value. So, but ratios, I mean, different stuff has happened on each testnet release in terms of like the action that occurred. Like in a couple of versions of the testnet, PHEX just went to the moon, right? And then, you know, so what happened? I don't know. Do people use their PHEX to flood into PulseChain to chase the new shiny object? Do they dump PulseX for Pulse because that's what they have more of? You know, there are a lot of the questions that you can ask, and the plays that can be made after the fork are many. There's no one way to play it. I think there's the simple thing here is if you're sitting on dry powder, I'll give you this, which is that if you're sitting on dry powder in a stable coin, because there is a question about stable coins here that we're going to answer in a little bit, you may want to put like a little bit of LP down here, because like, what do you care if you get the forked coins of stable coins on the network, on the new network anyway, because they probably won't have anywhere near $1 value, right? I'm assuming they won't. I don't know that for sure, but assuming that they're not going to have anywhere near $1 value, then you might not care, and you might actually get a higher return in the event of a sell-off and high slippage by setting some, you know, USDC here or here, where you can capture a lot of the volume on those capitulation wick lows potentially, and just earn fees, or potentially pull that position quickly if you're actively managing that position, and get HEX at like 2 cents again, right? This would be the last call. Now, I personally don't want to think that we're going to head down here. I really don't on EHEX, and PHEX can start very, very low, but I think it's actually going to get bought up. I think people are thinking of it as like a second chance to get HEX at a new price in a chain where you can use it as it was designed to be used.
Well, what is the case? So, you know, we have retail, we have whales, and they have different intentions. They're looking at different factors, but what is the case for HEX just mega dumping? And then what is the case for, and people, look for the dry powder, look for the 10,000x, that narrative. And then what is the case for it not? And I mean, do we think that OA is going to step in and do anything too? Everyone's talked about parity on and off too, but like, what is the case for and against it?
Juyoung, do you want to tackle any of those?
I mean, I'm just personally just throwing this out there. I think that PX is going to do very well. I think that a lot of the people who want to be whales in HEX, or people who have made a lot of money already in EHEX and maybe moved to a stable coin right now on Ethereum, I think when they move into PulseChain, I think they're maybe banking on hopefully getting like a below SAC rate price. It might not get there, or they may have had stakes that came out after the SAC was already finished, and they wanna up. They think they'll have a better return if they buy Pulse off the market and then immediately move it into HEX. But I think that there's still like a bunch of hype and a lot of people that want to get into HEX, and that tension's been building over 2 years. And just with everything going on and everybody kind of going crazy this past month, I mean, and nobody knows, no, not financial advice, but I think the people who are holding and get their copies of PHEX are going to do very well. They're going to be very pleasantly surprised, is my personal thoughts.
Is there a way that retail, just the onboarding, the publicity, the new people coming in, they overtake whatever say the whales are like, no, we're dumping X, we're using dry powder for PulseChain and PulseX. Is there a way for just the massive onboarding, if that happens, to just kind of cancel it out or push it the other way?
Yeah, of course. But we don't even need them for that to occur, because look at all the people that sacrifice for PulseChain here. They want their T-share account back. They don't. They're going now. They have an opportunity to buy it down in here. Like if they haven't already, they're looking to take some of their Pulse and PulseX positions and buy back their T-share position that they sacrificed up here at a huge discount. So any kind of sell-off in EHEX will likely get bought back up by big whales looking to accumulate back their T-share position, right? And again, if you take this fractal out, it literally is like it's a spinning image of what came before. So you could just drag this out. The law of increasing time over time, the market gets heavier, right? So then, okay, so it's something like this, right? It's getting longer, but the move is the same, because even from bottom to top here on Big Payday was 600% from bottom to top, leading into testnet B3 600%. It's literally pound for pound playing out the same exact way. Why wouldn't this sell off to the bottom of this trend? And then why wouldn't those guys that sacrificed here that are big want to buy back their positions here on this massive discount and then cover that 200-day moving average that becomes support leading into mid-end of the year, and then you really start to take out these higher resistance levels?